So let's dive deeper into developing a strategy for yourself. So, creating a detailed trading plan, including entry and exit criteria, risk management strategies, and monitoring procedures. So, entry and exit criteria, these are you need to specify the conditions that must be met before entering and exiting a trade. This could be based on technical analysis, fundamental analysis, or a combination of both. Now, for me personally, I use a combination of both. I use fundamental analysis to be aware of when the news hits. So when the news hits, I'm ready to get in as price starts readjusting. I don't trade before the news. I trade right after the news. And then the technical analysis, I'm more of a price action trader, but there are some things I do reference sometimes, like the VWAP, just to get a bias. Are we above it or below it? And that's simply all I'm doing, just to keep that in the back of my mind. If we're above it, usually price is going to continue up higher. If we're below it, usually price is going to continue on lower. But that is my strategy. That may not work for you, so you need to figure out what's going to work for you. But for the news events, that everyone should be aware of news events. Doesn't matter what system you're trading, because these will spike price. And if you have too tight of a stop loss, even if you're on the right side of the market, a news may hit you out and then go towards the profit. So figure that out. Figure out how you're going to know when to enter and exit. And then your risk management strategies, you want to define that. Stop loss levels, position sizing, and for me, that is all depending on when I figure out where my stop loss is going to go. I measure that, how much positions, how many contracts can I get to make sure my risk is still within 1% for that stop loss. So you might need a little calculator. You could use your phone. I just have a little one right here on the desk, so I'm quickly calculating and ready to put one contract, or maybe I'm ready for two contracts on that trade because that fits my risk percentage. Then your monitoring procedures. Determine how you will monitor your trades and market conditions. This includes setting up alerts and regularly reviewing your positions. So for me, I am scalping. I'm locked into the charts. I have areas on the charts where if price starts going back and past that area, I'm out of my trade because it's probably going against me. Or I have certain areas where if it does go there, it's not my full take profit, but I will close some of my positions. So I have profits locked in, risk is minimized, and maybe I'll move my stop loss up to appropriate location. And at that point, only at that point when I'm scalping, I will leave the monitors. I locked in my profits, I minimize risk, and I don't want to get emotional and close out too early. So I accept where my stop loss is, and I want price to go to where my take profit is, but I'm going to let price do its thing. It's going to hit one or the other, and that's that. So I'll walk away at that point. But other than that, that initial setup and two partials, I'm locked into the screen. Then back testing. We talk about this a lot. You want to keep back testing your trading plan. And if you see common mistakes or areas that you can improve on, tweak your system a little bit and then back test it with those new rules and see if you could slowly start improving your trading strategy. Now, you're never going to be 100%, so don't aim for 100%, but you'll know if you back test 30, 40, 50, 60, 70 trades over days and days and weeks, and then continuously back testing week after week, you'll start to see common mistakes that okay, if I see this happening, this is a no trade time, or this is kind of like a fake out for my setup. I'm not going to trade that, even though it looks like my setup. I know that usually it does this, blah, blah, blah. And those are just something you'll know with the consistency of trading your strategy. And when you journal it, take screenshots, and just keep track of all that, then those patterns will start to show you, hey, most of your losses, this was happening. And then you'll fix that, and maybe you start minimizing losses, and now your trading strategy has a higher profitability. Evaluation and adaptation. Regularly evaluate and adapt your trading plan based on your performance and changing market conditions. A trading plan is not static and should evolve over time. So like we just said, with more data, you'll figure out what's been working over and over again, and you also figure out what's not been working over and over again. and that'll allow you to adjust the strategy. Now, if you just win a trade and lose two, and then now you're emotional and you're like, oh, this trading strategy sucks. That is not a time to change the strategy. That means you need to backtest that strategy more and more so you become less emotional with the losses that happen within the strategy. So, diving deeper, evaluating and refining your plan over time as market conditions change. Keep track of your performance. Use a trading journal to record your trades and analyze your performance. Look for patterns in areas where you can improve. Reevaluate your goals and risk tolerance as your experience and financial situation changes. You may need to adjust your goals or risk management. So, if you're doing a funding challenge, for example, and you keep losing and you're closer to your stop loss or where your account closes, start dialing risk back so you could get more trades in and start building that account back up. Maybe you're risking too much to begin with, so when you do start scaling your account back towards profits, you don't go to 1% or 2%, whatever you were risking initially to get in that drawdown. Maybe you stick at 0.5% and you just start building up from there. You want to stay up to date on market conditions. So, for example, if you're going into recession, you could almost guarantee that the stock or index or currency is probably going to keep going down in a downward trend. So be aware of those big news events so you don't keep looking for buys when it's selling, or if you do get on a buy, smaller profit targets, because most likely price is going to keep continuing downward like we're seeing right now in the E-mini S&P. Also, learn from your mistakes. Don't be afraid to make mistakes, but do take the time to learn from them and adjust your plan as needed. So, like I said, no one has a 100% strike rate. You're going to lose. The market's not always consistent. It has its choppy days. It has its back and forth days where it starts whipping all the way up and then it whips all the way back down, and then we're at a zero sum. Then there's times when it kind of consolidates and just chops and it never really breaks out in a direction. And then there's trending days. So you need to be aware of what type of day it is as it's forming. It takes time, I know. It's not something you just know right away, but you can tell, hey, it usually around this time, price has made up its mind. It's still going back and forth. It's going to be a rough day, so maybe I do less risk. And those are just something you'll learn over time as you're trading and backtesting more, and you'll know what common news events, how they affect that day when the news happens, but also before and after in that week all plays a part of that. So I can't really just give you the secret key. This takes time and testing. That is why we offer 3 courses. First one, we're building your foundation, becoming a trader. Then we control your mind, make sure your emotions are in check, you're ready to go and you're focused. And then we start teaching you those advanced trading steps and strategies. And by then, you're ready to start trading. But even then, after all 3 courses, it's up to you to become profitable. I can't make it for you. I could show you everything that works for me, but you got to be honest with yourself, and maybe you need to tweak something to fit your trading plan, and then you'll become profitable yourself. So if you're curious about the advanced trading course, I'm going to show you 2 different strategies. One purely price action, one with indicators, and both of those have been profitable for me. I only use the price action one now, but sometimes you just need indicators to line up, give you a yes or no, and just trust those, so that way you could think less and get less emotional.